Hey traders, John Howell here. We're going to be looking at the QQQs. You can see interesting happening on the QQQs. Look at this here. It's rejecting right at that resistance level. So I'm going to talk about that. Also the S&P 500, very interesting. Look at this here, rejection right off that as well too. Also going to be talking about the this big movement up here in the energy sector. I'm going to be talking about that. And if you guys were prepared, I listened. I actually did a video at the start of the year talking about this, and I actually traded it. So very, very, very nice trade there. Also, the mining sector, guys, is looking really, really, really dangerous. So let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty, traders. So let's get straight into it. Traders. I'm running a flash sale to my breakthrough trading course. If you're looking for some sort of a breakthrough, if you're looking to learn the mistakes you're making right now, or you're looking to learn how to read the charts properly or anything like that, or some trading systems or stuff like that, then here's the thing. I'm running a $7 sale to my trading course. You can get access to that by the link in description, or go to Johns, Johns, flashsale.com. Let's get straight into what I talked about in the intro. Firstly, off the QQQs. A lot of people are bullish to QQQs right now, which obviously is the Nasdaq. And we're getting a lot of people who are very, very, very bullish right now. But what's happening on the Nasdaq is we're actually rolling over. So I wouldn't be too surprised to see, look at this here. So this long-term trend line that we had back here, from this support level there to that support level there to that support level there. And look what's happening now. We're rejecting that level there. But even if we do take off this trend line, which is actually rejecting, you can see support, and then it's rejecting at that level. Even if we do take off that trend line, what's happening here is that we've had a double bottom. Right, so there's the double bottom there. We came down, made a low and a lower high, and now we're rolling over. So I wouldn't be too surprised to start seeing more of this into next week to get a bit more of a bloodbath. There's not a lot of fear in the marketplace yet to create a lot of buying, not yet anyway. So very, very, very interesting stuff what's happening there on the QQQs. Moving over now through to the S&P. And this is something that I did a video 2 days ago, right on this gold nugget right here. I said, this is do or die. And look what is happening right now. We came down, rallied up, hit resistance, and now we rejected it. And we're squeezing up into this level here. So wherever this breaks out, I believe it's going to be to the downside, because I still believe there's not enough fear in the marketplace. And I know some traders, for you guys that are new to the markets, when I say there's not enough fear in the marketplace, you're probably thinking, John, that doesn't make sense. If there's not enough fear in the marketplace, then shouldn't it be there's a lot of greed in the marketplace, so therefore the market's going to go up? Not necessarily, okay? Whenever you get these periods of really not much going on through here, and there's a lot of sort of fear, and there's a lot of uncertainty about what's happening with interest rates and inflation and all that sort of stuff. What happens is that when the market drops down, it's not until when most people start to become really fearful that you should start to become greedy. Make sense? It's a bit of a contrarian. If a lot of people are greedy in the markets, that's when you know you're pretty close to some sort of a top. Now, not that day, within say a week or two, or you may be in for that, very close to a month or so. You're getting very close to a top. So right now, to me, it does look like, and even if I go back to my hourly charts as well, you could see what's happening here. We came down, made a low, rallied up, made a lower high, and now we're getting a little rally here. So I wouldn't be too surprised even if we got a little bit more upside, low and a lower high. I wouldn't be too surprised if we started to see something like this and then a breakdown on the S&P 500 to see more downside to come on that level through there. Move over now through to the XLF. And traders, if you remember at the start of the year, this is one market that I was just like, this market's going to the moon action and all that sort of stuff. And I've been really harping on about the energy sector. And my very first video was this breakout day here. And again, You can go back to my channel at the start of the year. You can see when I was like, I think I titled, inflation and energy sector boom or something like that. And look what's been happening to this energy sector, just absolutely just powering on. And from this pullback, and I have a target of 66 up there. Now, right now is the wrong time to be getting in, because you never know exactly if it's definitely going to get up to here. But the right time was to get into, which I did get into, the energy sector, which was on the breakout, right? We had a move up, we have a pullback, and then as it's breaking out, that's when you buy. You buy here, you don't buy here, because who knows, this could actually be the top, and we could start to see, or short-term top, and we could start to see a pullback in the markets there. So the energy sector is definitely ramping up. That's along with oil as well too. So I reckon the inflation, we go back to the oil, this is the USO, this is the oil. Look at the oil just absolutely just ramping, just absolutely just going crazy. So oil is just starting to take off big time. So maybe the inflation number is going to continue to rise and rise and rise in that. They're definitely stuck between a rock and a hard place. They raise interest rates, they're going to cause a recession. Now, not straight away, guys. A lot of people have this thing about, oh, geez, my goodness, they're going to raise interest rates and that's going to cause the market to crash. It generally takes a good 3 or 4 times, or when they start to raise the interest rates, you're generally 6 to maybe 12 months off the top. That's the average anyway. It's not the exact. Sometimes it's sooner. You know what I mean? But that's the average. As soon as they start to raise interest rates, that's not the top. You generally get a bit of a shake and bake in the markets, a bit of a fear, uncertainty, and doubt. But then what happens is then the market continues up, and as long as they raise interest rates slowly, like quarter base point, as long as they do that, then the next interest rate's not going to be the top of the markets. We're probably another maybe 6 to 12 months, maybe even longer, off the top in the markets, because they've started the tightening cycle in the markets there. So don't be afraid of the market completely falling off the cliff. I do see more downside to come, but I believe we're going to see a lot more upside to come. Maybe the interest rate is going to get to maybe 1.5%, maybe 2%. And then when that happens, yeah, we're going to start to see a lot of problems in there. But we're way off that. Now, if they start to jack it up really quickly, like 0.5%, maybe even 1%, then that's going to be crazy bearish for assets. Now, one thing I do say, traders, is that for the last 20, 30 years, we have continued to see interest rates go lower and lower and lower and lower and lower and lower to zero, right? Right now, we are at the bottom of this cycle. And so therefore, traders, it's coming over the next 3 or 4 decades, right? Is now we're going to start to see massive interest rates go back up again to very high interest rates, because we've gone through this cycle. We've gone through the last 30, 40 years of continued to go lower and lower and lower and lower and lower and lower. Okay, so this is what the interest rate sort of level looks like. In fact, so I want to share this with you here. I actually ordered some Giorgio Armani. I also ordered some Savage. I think it's called Savage. And then I also ordered some blue, some Chanel. I think it's Bleu de Chanel or Chanel. Yeah. But my goodness, the Chanel tastes so good. Or looks so good. In fact, actually, that's the inflation rate. Let's go to the United States Fed funds rate. And then let's go to max. And then as you can see, right, since 1980, we've got this continued downward leg through here on the interest rates. So that's, everything goes in cycles, right? So we've been in a cycle of lower. Guess what's going to happen over the next 10 years? We're going to start to do this, right? It's just going to go back up again. Now, maybe not 25% interest rates, but you know what I mean? Like back up to maybe 15% interest rates. And maybe at the end of this decade, because inflation is just getting started in my point of view there. Move over now through to the mining stocks. And the mining stocks is something I've been talking about now for the last few days. But the mining stocks are looking really, really, really bad, really bearish. And I wouldn't be too surprised, traders, if they slam the hell out of this thing. And it's just not looking too good here. We're still getting this period of, we had this move down, and now the market is not doing much. The market's very sort of quiet, the calm before the storm. So I wouldn't be too surprised if we started getting some strong selling out of the mining sector. And once they do that, then the waterworks or the waterfall is in place, and then away we go to the downside. Same for the SIL as well too. Same sort of thing. And even some of the stocks as well, like gold, like Barrick Gold. Look at this here. This is looking ugly for mining stocks, traders. Now this is for short term. I believe we're going to see this dip, but that's going to be an awesome buying investment opportunity. Look at this here. We're getting sideways movement here, as well as creating these lower highs through here. We're squeezing up. As you can see, we're squeezing up into this triangle pattern. Not much going on. There's a calm there, calming effect. And then I just see this thing getting slammed like that. And once it does, once we start to break below, say, 18, my goodness, traders, we're probably going to get slammed down to, especially this one down the bottom here. The next, man, probably 14, maybe even down to as much as that low level through there. There's that level through there that last time, so maybe that's the level where we go to. But once we start to break down, traders, this is not looking good at all. So if you're hoping and praying, even looking at this level through here, right? This weekly chart, look at this here. We're in a downward trend. We're not doing much, traders. This is not looking too good for the downside. Now, obviously, I shouldn't say not too good, right? Because we could buy puts. We can short the shit out of this thing, right? So it's not bad. To me, it's an opportunity to like, oh, here we go, right? Opportunity for a very good long-term move to make some good money out of. So to me, and even AG, right? So that's obviously Barrick Gold, and even First Majestic. First Majestic's doing the exact same thing. Look at this here. We have this major low level of support that's been here for quite some time. We've been coming down through to here. Look at this here. Look at this quiet period. Traders, this is not setting up good for the bulls. This is about to get slammed. And then we're probably going to do something like this on a big breakdown. And then we're probably going to start to see something like that as well. Now, the next major support level, especially on AG, is down there. So that's not looking, well, it's not looking, I shouldn't say it's not looking too good. Like, what is good? Like, if this is an opportunity trade, I'm going to be buying puts, right? I'm going to be, or at least going to be shorting it, and capitalizing on it. Even though I'm very long-term bull on the markets, if the market is giving me a shorting opportunity, you better believe I'm going to be shorting it. And so I shouldn't say it's not too good. It's just the market's about to get slammed, and that actually could be a really good opportunity for us to take advantage of that. And even if we go back to silver as well too, look at silver. Silver, if we go to our weekly charts once again, look, this is our weekly charts. We've got our high, a lower high, a lower high. Look at this here, just compressing down now. Traders, this is not looking too good. This is the warning sign. This is a major warning sign that the market is about to get crushed. And we're getting this calming period. And once again, traders, I wouldn't be too surprised if maybe next week we get this slamming effect on this market here, and then we start to get a bit of a waterfall effect after that, because we've done nothing through here for quite some time now. Like, how long is that? How long has it been doing nothing for? Look at that there, over a month of not doing nothing. The calm before the storm. And traders, when the market doesn't do much for a long time, we tend to get pretty sharp moves like this back here, right? It didn't do much, and then we got the waterfall in the markets there. So there we go, traders. Again, just because the market goes down doesn't mean it's a bad thing, right? We can benefit from either side. But there's a lot of amazing opportunities that are underneath our feet right now. Like, as I talked about before, like at the start of the year, which was only about, a few weeks ago now, I talked about we're getting ready for a big breakout. And I talked about the weekly charts as well too, how the weekly charts is pulling back and we're just continuing up. And that was an amazing, incredible trade to start the year off. And I'm also talking about the warning sign of the energy, the mining sector as well too. We haven't got the breakdown yet, so I'm not short yet, but I could be getting ready. Now, I may or may not trade it on the short side. I need to make sure it checks with my rules. So, because there's no guarantees, right, of this actually making a profit. There's only a high probability of it doing well. So traders, when I first started trading, I lost $250,000 trading the markets. And then I got access to a few seven-figure mentors that really set me straight on what I need to do with the foundations, how to read the charts, the trading systems, the mindset, so on and so forth. And then that was the massive turning point for me to be doing really well from actual trading and being successful trading. So what I've done is I've created a course called the Breakthrough Course. And what I've done is I've actually put a whole bunch of really good education and strategies and processes that help me go from $250,000 in debt to then actually becoming a full-time trader, making a full-time income from trading. And I'm actually running a flash sale to that trading course. So if you go to johnsflashsale.com, or there should be a link in the description. If there's not, then go to johnsflashsale.com. That's JOHNS flashsale.com. Go to johnsflashsale.com and you'll be able to get access to this course now for $7. So go get access to that right now, guys, and I'll see you real soon.